Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on set off and carry forward of losses. So far 5 problems I have completed till the last video. Now in this video I'm continuing from 6th problem. So if you have watched the earlier problems, definitely you are in a position to solve a problem on set off and carry forward. What are the provisions given by Income Tax Act 1961 regarding the set off and carry forward of losses? So if you have not watched those videos, I suggest you to go to the playlist of my channel. Select the subject Advanced Aspect of Income Tax. Watch the video on set off and carry forward. Be acquainted, be thorough with all the provisions of Income Tax Act. Then only you can be able to understand this. The problems are completely based on the provisions which I have explained. Now before starting the next problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take a screenshot of the notes of the solution which I have given on the board. Then I'll explain each and every point of the problems. Come on. See the 6th problem. Compute total income and tax liability of Mr. Govind, a resident individual, under 2 different situations. Situation 1, situation 2. First situation, short-term capital gain. First we'll discuss about first situation. Then we'll discuss about the second. Short-term capital gain or loss. So first situation it is given minus 5 lakh. That means there is short-term capital loss of 5 lakh. Then long-term capital gain plus 10 lakh. So situation 1 we have long-term capital gain and short-term capital loss. Then profit or loss from speculation business minus 50,000. That means there is a loss in speculation business. Then profit or loss from non-speculation business plus 60,000. So non-speculation there is a profit of 60,000. Speculation business there is a loss of 50,000. Now we apply the provisions of Income Tax Act. First of all, the short-term capital loss can be set off from long-term capital gain. That is a provision already I have explained in the previous video. Similarly, the loss in speculation cannot be set off from the profit of non-speculation. So speculation loss cannot be set off. It should be carried forward. The speculation loss can be set off only from speculation profit and nothing else. That's all. Now, first situation, I'm finding out the total income and tax liability. Computation of total income. First, we'll take capital gain. Capital gain, long-term capital gain, 10 lakh rupees. From long-term capital gain, short-term capital loss can be set off. Already I told you, short-term capital loss can be set off from long-term capital gain. So deduct the 5 lakh rupees is the net long-term capital gain. Now business income. In business we have non-speculation business, there is a profit of 60,000. But speculation business there is a loss. Simply you have to write a note that loss in speculation business cannot be set off. It should be carried forward. And non-speculation business, there is a profit of 60,000 I have taken. So total income is 5,60,000. In note I have given the loss from speculation business cannot be set off from profit of non-speculation. This speculation loss should be carried forward to the next year and can be set off in the next year only from speculation profit. Now basic exemption. The basic exemption of the SSC is 2,50,000, non-senior citizen, nothing is given, we assume non-senior. So 2,50,000 basic exemption. In this, 2 incomes are there. This 60,000 is the normal income and 5 lakh rupees is the special income, because on LTCG there is a flat rate of tax of 20%. Whereas normal income, slab rates will apply. So from basic exemption of 2,50,000, deduct the LTCG. Sorry, deduct the normal income. The normal income is 60,000. So out of 2,50,000, deduct 60,000 normal income. So there is a deficiency in basic exemption of 1,90,000. 1,90,000 is the deficiency. And this deficiency can be deducted from LTCG, long-term capital gain. Remaining LTCG is taxable LTCG, on which 20% flat rate of tax. So here, this deficiency of 1,90,000 can be deducted from LTCG, and the remaining LTCG is taxable at 20%. So long-term capital gain 5 lakh rupees, already we know it, taxable 5 lakh. From 5 lakh, deficiency will be deducted. Deficiency 1,90,000 deduct. So remaining taxable LTCG will be 3,10,000. 20% is the tax rate. So 20% of 3,10,000, 62,000. To this we add health and education says 4%. Tax liability 64,480. That's it. This is the situation number 1. Now I am reading out situation number 2. Short-term capital gain or loss, it is plus 10 lakh. So there is a short-term capital gain of rupees 10 lakh. Long-term capital gain or loss, it is minus 5 lakh. That means there is long-term capital loss. Now remember the provision. The long-term capital loss cannot be set off from short-term capital gain. So simply you have to give a note that long-term capital loss 5 lakh cannot be set off. It should be carried forward to the next year. In the next year, it will be deducted from long-term capital gain only. Then profit from speculation is 60,000, whereas loss from non-speculation business is 50,000. Again, provision you have to remember. The loss in non-speculation business can be set off from the profit of speculation business. Vice versa, it is not possible. The loss of speculation cannot be set off from non-speculation. Loss in non-speculation can be set off from speculation. So here, the solution is short-term capital gain 10 lakh. Complete short-term capital gain is taxable, normal income. Long-term capital loss cannot be deducted. Next, business income. Profit from speculation business 60,000. Whereas there is a loss in non-speculation business 50,000. So deduct 50,000. 10,000 rupees is the remaining income. Take the total 10 lakh 10,000. One point you remember, there is no special income here. Short-term capital gain is a normal income and business income is a normal income. So slab system will be applied on 10 lakh 10,000. Now in note, long-term capital loss cannot be set off from short-term capital gain. The long-term capital loss should be carried forward. Second point, the loss in non-speculation business can be set off from the profit of speculation business. That's it. Now we have to compute the tax liability. Tax liability. First slab up to 2,50,000, nil, no tax. Second slab from 2,50,001 to 5 lakh. The income is 2,50,000, 5%. So 12,500. The third slab goes from 5 lakh 1 to 10 lakh. 5 lakh is the income. 20% tax, 1 lakh. Over 10 lakh rupees balance, that is taxable at a rate of 30%. So your total is 10 lakh 10,000. Out of 10 lakh 10,000, first 3 slabs you deduct. 10 lakh deduct. So balance 10,000. 30% of 10,000, 3,000. Total is 1,15,100 is the tax. To this we add 4% health and education cess as usual. So tax liability 1,20,120. That's it. I have explained so many points. So if you want the complete command, I suggest you to keep a notebook while watching the video. Whenever I say some new point, immediately you should write it down. Otherwise you will forget it. So if you follow these steps, definitely you can get a good command on the subject of income tax. Completely depends on provisions. Many students will score less marks in income tax. The reason is they will forget the provisions. They will make mistakes in the law. We cannot make. We have to follow the provisions of Income Tax Act. Now, next one, seventh problem. From the following particulars, compute total income and tax liability of Mr. Naunihal Singh. So both total income and tax liability. So here you can see Mr. Naunihal Singh, computation of total income. First one, income from salary 6,30,000. Directly I have taken income from salary 6,30,000. Next, loss from self-occupied house gross 78,000. Profit from specified business storage of agricultural products 2,96,000. Winning from lottery gross 1 lakh. Then loss from specified business warehousing of dairy products 1,08,950. We can see here there is a profit from specified business and also there is a loss from another specified business. We can make intra head set of two businesses. Two types of specified businesses is having. In one specified business profit, the other specified business loss. So we set off business income, profit from specified business 2,96,000 minus loss from specified business 1,08,950 deducted 1,87,050. From this we can set off inter-head set off. There is a loss on house property, loss on self-occupied house 78,000. That loss we can deduct from business income. So less loss from self-occupied house 78,000. So business income will be 1,09,050. Right? Now winning from lottery is a casual income. It is included in the total income, but it is separately taxable at a flat rate of 30%. So casual income, winning from lottery 1 lakh. Next comes winning from camel race received. So winning from camel race 2 lakh. Next one is loss from agriculture. According to the present provisions, agricultural income is fully exempted from tax under section 10 subsection 1. Agricultural income is exempted. When there is loss in agricultural income, it cannot be set off because income itself is exempted. So losses will not be allowed to be set off. So simply write a note. Agricultural loss cannot be set off. Next, loss from owning and maintaining race horses. Actually, profit from owning and maintaining race horses is taxable under income from other sources. So this loss cannot be set off from any other income. This loss from owning and maintaining race horses can be set off only from profit of that activity. Only from profit of owning and maintaining racehorses. If this loss cannot be set off during the current year, it should be carried forward to the next year. Next year, if there is profit from owning and maintaining racehorses, from that profit, this loss can be deducted. So simply write a note. Loss on owning and maintaining racehorses cannot be set off from other incomes. It should be carried forward. Then winning from motor races for participating in the race 10 lakh. So this is also a casual income. So three casual incomes: winning from lottery, winning from camel race, winning from motor races. The total is 13 lakh. The total income 20,39,050. Now one point you remember. In this total income of 20,39,050, there is normal income and there is casual income. On casual income, there is a flat rate of tax 30%, so separately it is taxable. Whereas normal income, slab system will apply, so we segregate. Tax total income is 20,39,050. From this we deduct the casual income. Casual income is 13 lakh. Deduct 13 lakh. So remaining 7,39,050. This is the normal income. On this normal income, slab system will apply. Up to 2,50,000, 2,50,000 nil. Second 2,50,000, 1 to 5 lakh, 2,50,000. It is 5%, 12,500. Now balance. Because the total income is 7,39,050. From 739.50 deduct the 5 lakh. The remaining is 239.50. Balance 20%. 47,810. You add up. You will get 60,310. So 60,310 sorry, 60,310 is the tax on normal income. To this we add tax on casual income. Casual income is 30 lakh. So 30% of 13 lakh is 3,90,000. Add up 3,90,000, 45310. To this you add 4% health and education cess as usual. We'll get tax liability 4,68,322. But according to the provisions of Income Tax Act, always there is TDS on winning from lottery. On winning from lottery, TDS is applicable. So what is the rate of TDS? 30%. How much is winning from lottery? 1 lakh. So on 1 lakh rupees, 30%, 30,000. Deduct 30,000. TDS already made. So tax due 4,38,322. Round it off to the nearest 10. The last the 2 digits 22. Make it 20. So 4,38,320 is the tax due. This is the end of problem number 7. So we have completed 7th problem. Now 8th and 9th problem I have written on the board. Take a screenshot, then I'll explain each and every point of the 8th and 9th problem. Take a screenshot. Come on, see the 8th problem. Compute the total income of Mr. Vasu. Income from salary is given 1,05,000, loss from let out house 87,000, loss from self-occupied house 42,000, and income from other sources 5,000, loss from betting 13,000. I'll explain you the provision, then we'll come to the solution. Income from salary, fully taxable, loss from let out house and loss from self-occupied house. So 2 houses, self-occupied, let out, both losses. We can be able to set off from other incomes. And income from other source 5,000. Loss from betting cannot be set off from any other income, nor it will be carried over to the next year. It cannot be carried over, it cannot be set off. Simply write a note, that's it. Now come to the solution here. Computation of total income, income from salary as it is I have taken. Then income from other sources 5,000 given in the problem. The total is 1,10,000. A loss from house property, let out house 87,000 loss and self-occupied 42,000 loss. The total loss from house property is 1,29,000. 1,29,000 is the total loss from house property. Whereas income available is only 1,10,000. Income available 1,10,000. So 1,10,000 minus 1,29,000. You'll get minus 19,000. This minus 19,000 denotes the unadjusted house property loss. Unadjusted house property loss. And this loss from house property will be carried over to the next year. And in the next year, it can be set off from income from house property only. That point. Now, total income is nil. Then loss from betting cannot be set off from any other income. That's it. These are the provisions. Next problem. Problem number 9. Srimati Meena Rathi, age 68 years. Senior citizen. Senior citizen 60 and above. So senior citizen के लिए basic exemption limit 3 lakh. Submit the following particulars of income, compute total income and tax liability. Income from salary 4,57,000. Now see carefully the solution here. Srimati Meena Rathi, computation of total income. Income from salary is 4,57,000 given as it is I have taken. Income from house property. He is having 3 houses. House at Kakinada, there is an income of 23,600. House at Kadapa, there is a loss of 9,200. House at Karnool, there is a loss of 10,000. So one house, there is income. The other 2 houses, loss. So first we make intra-head set off within the same head. So profit, income from house property. House at Kakinada, there is income of 23,600. House at Kadapa, there is a loss 9,200. House at Karnool, there is a loss of 10,000. So total loss will be 19,200 is the loss from both the houses. And income is 23,600. Now deduct 23,600 minus 19,200. 4,400 is the income from house property after set off. Now profit from business. He is having different businesses. Computer business profit 72,000. Cloth business profit 48,000. So computer business, cloth business, both are non-speculation business. So computer business profit 72,000, cloth business profit 48,000, total 1,20,000. Now fancy store business there is a loss of 82,000 and flower business loss 40,000. Again two more non-speculative business, that is store, fancy store and flower, both are losses. So we can deduct intra head set off within the same head. So fancy store business there is a loss of 82,000, flower business loss there is a 40,000, so total loss 1,22,000. So income is 1,20,000 and loss is 1,22,000. So 120 minus 122, so 2,000 rupees loss from non-speculation business. Loss from non-speculation business 2,000. Now there is one more item given in the last line. Profit from specified business 66,000. He is also having specified business in which there is a profit of 66,000. So we'll take profit from specified business 66,000. From this 66,000 we can set off the loss in non-speculation business. The loss in non-speculation business can be set off either from the profit of specified business or profit from speculation business. Any business income, this non-speculation loss can be set off. So minus 2,000 plus 66,000, it is 64,000. So 64,000 is the profit from non-speculation business. Sorry, specified business. Now, profit from speculation in silver 60,000. Loss from speculation in gold. Two speculation business is having silver and gold. There is a profit in silver of 60,000. There is a loss in gold of 84,000. So we can set off the profit and loss in speculation. So profit in speculation is 60,000. Loss from speculation gold is 84,000. So 60,000 minus 84,000. 60,000 minus 84,000, you will get minus 24,000. This minus 24,000 is a speculation loss. It cannot be set off from any other income. It should be carried forward to the next year. In the next year, if there is any speculation profit, from that speculation profit, this speculation loss can be set off in the next year. So simply I have taken it in the inner column. I have not taken in the outer column. So speculation loss to be carried forward. Last item, income from other sources. Here we are having profit from betting and loss in betting. Profit in betting and loss in betting cannot be set off according to the provisions of Income Tax Act. Income Tax Act says profit on betting, gambling is fully taxable as casual income. But any loss is there, it cannot be set off. So here loss in betting cannot be set off from profit in betting. Simply we will take profit in betting is 12,000 outer column. Total income is 5,37,400. We got the total income. Now we are required to compute the tax liability. First of all, total income is 5,37,400. Remember in this 5,37,200 we have normal income and also casual income. Casual income is income from betting. This is casual income. On casual income, there is a flat rate of tax, 30%. Whereas normal income, slab system will apply. So we have to segregate. So 5,37,400 minus casual income 12,000, normal income 5,25,400. So first we calculate tax on normal income. First slab, up to 3 lakh. Why 3 lakh? Because it is given the SSC age is 68 years. Senior citizen. Basic exemption limit 3 lakh. Up to 3 lakh rupees income nil. 3 lakh 1 to 5 lakh second slab 2 lakh rupees. 3 lakh 1 se lekar 5 lakh 2 lakh. So 5% comes to 10,000. Now balance 5,25,400 minus 5 lakh will get 25,400. 20% 5080. Take the total 15,080 is the tax on normal income. Tax on normal. To this we add a tax on casual income 30%. 30% of 12,000, 3,600, add up 18,680. To this we add as usual 4% health and education cess, calculate 4% of this amount, 747. So ultimately tax liability 19,427. But TDS and advance tax is given in the last line. The SSC has paid during the year TDS as well as advance tax. How much? 20,000 rupees are paid. So deduct 20,000. 19,427 minus 20,000. Minus 20,000. You will get minus 573. The ultimate answer, minus 573. That means tax refund. Refund of tax from the income tax department. Actual liability comes to 19,427, but he has already paid 20,000. So remaining 573 income tax department will refund to the SSC. But it should be rounded off to the nearest 10. The last one 73, so make it 70. So finally the income tax department will refund the tax, 570 rupees, that's all. So this is the end of problem number 9. So far 9 problems I have completed on set off and carry forward of losses. Inshallah we'll continue the next problem in the next video. But again I am informing you that I have started a new channel by name Khan's Accounting Institute. This channel I have made for particularly IGCSE students because I got so many messages from different students, international students. They want a specific channel for IGCSE courses of Cambridge and Excel. That is the reason why I have started a separate channel apart from this channel. The channel name is Khan's Accounting Institute. Please do visit that channel. Watch the videos, definitely you will get a lot of knowledge, you will get the command on our subjects of accounting, finance, management, etc. And do subscribe my second channel also. Inshallah, we'll continue the next problem in the next video.